Good morning, welcome to Morning Outlook. This is Kim speaking on Wednesday the 28th of February. So my thoughts are right, and we did see a continuation to the downside, or break of the downside there on the euro eventually after pushing up a bit further than I expected yesterday. But anyway, it has rolled over. It looks like it's pretty much air kissed the daily 50 through the Asian session this morning. Where to now? Well, I think there could be still some further weakness, and this 50 MA itself, it was a good target in terms of initial, but when you look at it's been hit before, so it'll be interesting to see how we run through this morning. However, I'm not expecting it to come straight down. We may get a bit more bounce from where we're sitting at the moment. I'm looking at sort of shorter time frames. There's a sort of, depending on what indicators you use, there's a sort of divergence between these two lows on the MACD maybe, but there is a long time between them. But well, there is a, as I say, slight divergence here. There's certainly signs of divergence sitting along here on the AUDUSD. It's bitty. It's whether to sell into the 60-21s or wait until it see if it gets back to its daily pivot, which is obviously has a good probability. But I'll see how it reacts, I think is the answer. But I do want to sell into any retracement or reasonable retracements, and it may be a bit of patience just to see if it pulls back a bit further. So as I say, there is a bit of conflict at the moment with the support of the 50, potentially the divergences that are sitting across the lows here. So a bit more of a retracement would back to at least those 21s would be more comfortable. Okay, which aren't far away, of course. The pound has come out. It's not sold off quite so much as the euro had there. It did manage to readjusted the trend line for the previous few days earlier on the pound, and it's broken that yesterday. But it managed to close back with inside that little range, but we'd sort of pitched out of it, just walked out of it sideward. Now, as I said before, as much as I think the pound's fine for some small intraday shorts maybe, but it does carry that extra risk of someone talking about Brexit, and on that basis. Just got to be careful with it, but it will no doubt have any effect of any strengthening of the US dollar. For now, on this 4-hourly, just consolidating here. You see it clearer on the 60-minute here. The bars sort of loaded inside bars and just choppy sort of price action. Now it has come within a smidgen of its daily pivot here, and I probably should have talked about this one first because it's also into its 21s. And it may be rolling over. It may be the easier one today. Just reach for my trend line. There we go. Hopefully it's the right one. So we're sort of looking short term somewhere in there. We've already taken out the lows, the earlier lows. So this is a much nicer looking setup if it breaks these lows here this morning. Maybe as an opportunity back towards yesterday's lows. Maybe down to the S1. It's air kissed the daily pivot here, may have caught it on more composite price, so some brokers may have already seen the pivot hit, in other words. So yeah, it may be the easier option of the two, but you just got to bear in mind the risk of comment. Now May doesn't speak until Wednesday, but you never know, as they say. Dollar yen, still expecting more upside towards that daily 21. It's slowed up as where it is at the moment. It was doing making good progress. It still hasn't effectively weakened the same as the euro has yet to break this trend line, and the pound, they're both broken trend lines. This is yet to break anything. It's just sitting there. It hasn't even broken through and pulled back yet. So it's just been a bit more stubborn in its move. I still think there's the potential for upside. Now, the only thing is, if we start seeing risk off, we could see money coming into the yen. So it often sees the money run towards it, but it's not really in that sort of situation. It's just really we're just seeing some bullish, well, I say reasonably bullish talk from the new Fed chair, Powell. with the interest rates pushing up, and we've seen interest rates in Germany yesterday actually coming in slightly below, slightly lower. It's shown that the US still that bit further on the loop, and they're still going to be increasing interest rates. And okay, so it just leaves these other currencies a little bit. So it's a more of the reason the price actions happening is really more based on the strength of the currencies as opposed to fear in the markets. And well, so this move on the yen could easily bounce still. That's a long way around putting what I was trying to say there. Phew. Okay, Aussie dollar. Well, it's broken again. This sort of lower trend here. Again, we're finding support just below in terms of the 100 to 200, pretty close together here. Just sort of giving some support. There's some fractional divergence maybe on the shorter time frames. That will be sitting across there. I should imagine a MACD. Yep, MACD over that longer period. It's got some divergence. It is quite a long period, but there is the divergences there. So perhaps we may have some bit more upside now with the Aussie. It's a very similar picture in a sense to the euro, but it's just progressed a little bit further. It's not too far away from the daily pivot there. It may go from where it's sitting here and continue to the downside. But again, there's a double divergences. I'd like to. It's probably worked off in real terms. The RSI is almost back towards 80 area, but it would have been nice just to see that worked off perhaps a little bit more. And finally, the other pairing I do not trade in the morning, the Canadian dollar. Canadian dollar has broken through yesterday again. This is another one that's broken through its trend. It's all right at some potential resistance on the monthly time frame. It's just running into some resistance. So there's a potential point of resistance where it's sitting there. From the 4-hourly point of view, it's choppy. I would imagine again we'll see there's a bit of divergence sitting there on the MACD signal. It's again whether it will roll over further. To me, it's just consolidating. It might just work off the divergence by running on an inner sideward pattern as opposed to selling. There's certainly divergence on the RSI there in this shorter time frame, and so it has potential to roll over more. It's now, well, it's almost showing a bit of, no, it's not really hidden divergence. We've gone lower here, but it's looks weak and against the dollar, so hence we could see more of a push up there. So news today then, finishing off here, we got the CPI flash estimate out this morning for Europe, which is expected to come in around about 1.2. As I say, we've already seen the German data yesterday and other data through, so this flash estimate may still give us a bit of volatility around about 10 o'clock. It just really confirms that inflation isn't picking up in Europe as much as they possibly like it, or on the curve they'd like it to be on. GDP, we got the US GDP coming out, second reading. This second reading still can give a bit of volatility, so that's 130. It's not normally a big volatility, but may give us some movement. And that's pretty much it. Crude oil inventories, they've slowed their effect down at the moment. Pending home sales, nothing really. Chicago PMI, so nothing significant there today really, but there is some news coming out. Okay, that's it for me. Have a great day. Bye for now.